All right, everyone, welcome back to the channel. Thank you for tuning in today. I want to go over today more so in detail about M structure, W structure formation. Some people get confused when it comes to looking for those type zones, and they even get confused sometimes because they're possibly waiting for a pullback to those zones sometimes. Now, primarily when we see an M formation or W structure we're looking for longs, M structure we're looking for shorts. Now, I'm not saying that every single time that you're going to get those type formations or structures when price pulls back to a zone we may be looking at on the higher time frame. So I just kind of want to go over some examples because sometimes I'll look for take a trade at an M or W structure or wait for that formation, which is purely what you're doing at that point. You're looking for a means of rejection. Sometimes when price gets back to a zone, it could be a higher time frame zone, and we're going to talk about this because lots of times I'll mark zones off my 12 range chart and then I'll scale down to a 4 range chart. I talked about paired chart entries or paired charts, being able to have multiple means of confluence, marking your zones on a higher time frame, say for instance the 12 range, and you're using your 4 range chart for a entry, that'd be the lower time frame. So we're looking for the M structure if we're looking to go short to happen or unfold on the 4 range chart, and to go long a W formation structure. So, but again, like I said, not all times will we get that W or M structure. Sometimes price may tap back into you say for instance that 12-hour supply zone, and I'm looking for the break of the candle in opposite direction because we may not get an M structure formation at the tops to go short. All right. So, but I also want to show you too, because sometimes what I'll do is even if price does create an M structure or W structure formation and I missed that opportunity, well, you could get in what's called a second chance opportunity or price retesting a higher time frame zone again. And when it does that, what you have is an instance where you have a lower time frame supply or demand zone unfolded just as well. I've talked about this in many videos about price, looking for opportunities where price taps into a supply zone, okay? Then we get a break of structure on the lower time frame and a pullback to that zone. So there's a couple different ways you can actually, and a couple different strategies that you can use to get into a trade. Sometimes it may not unfold the way we want to see it, and we may miss the opportunity. So I'm going to go over a couple of examples here to show you instances where, say for instance, I was looking for a demand setup, okay? And I'm going to talk about that because that's a trade setup that I saw unfold on the 18th, using that as an example. But two entries I want to show you here on the August the 22nd, okay? Again, this is, if you can use these type techniques as part of your strategy, it helps you get into a more precise entry when you're scaling down to a lower time frame chart, okay? So I'm going to start off with one example here, okay? You see this purple box right here. All right, we're going to go into detail about that. That happened on August 22nd when price pulled back to this key area of supply right here. Now, you see what happened here. Price started making lower lows and lower highs when it moved to the downside here, right? And as it did so, it started breaking some small areas of structures, these little zippers here, as it pulled lower, making lower lows and lower highs. It pulls back. It tests this zone right here, which is a supply zone. So what you see here, there is a M structure formation here on the 12 range chart, right, as you see it right here. But what you want to do, if you don't like taking your trades directly from the 12 range chart, lots of times you see me do that. I'll take the break of the candle in the opposite direction type trade, and without price even waiting for an M formation here, okay? Now what the M formation does, if you scale down to a lower time frame chart, it allows you to get into a more precise entry, okay? And lots of times you want to, have that provides you multiple means of confluence, okay? That means that price, for one, has pulled back to this key area of supply right here. Even if you scale down to a lower time frame chart, the 4 range chart, within this area, you're also going to see an area of supply that was created on the 4 range chart, okay? And then we're looking for an M formation or structure to happen on the 4 range, all right? So let's scale down now to the 4 range. I'm going to show you what I'm talking about right quick. So here's that opportunity that unfolded. Let me make sure. Let's see here. We're talking about 44.25 area, and yeah, 44.25 area. Okay, so let's go back down to the 4 range chart. All right, and what we see, price is pulling back here, right? So we got a structural break to the downside right here, even on the 4 range chart. That's what I'm talking about, where we have multiple means of confluence. We have both two levels of supply, one on the 12 range, which I marked up and showed you just a minute ago, and now we have an area here on the 4 range. This is also an area of supply that was created here on the 4 range. Now, what we want to particularly focus in on is to see is once we tap into that 12R supply area, are we going to get any type of M structure formation? Again, if you're looking for M structures, when we scale down to the lower time frame to go short, we are looking for a structure to unfold like this here. It looks similar to an M if you pay close attention. Right here, pushes up on a retracement or pulls back right here, if you want to call it that, right here, and forming an M structure. Primarily what you want to do is take the break at the below here, if you want to, right below the V structure here on within the M there, and go short. Now what happens? Yes, you take the break there below that M, excuse me, below the V point structure of the M formation here. You go short and price pulls back, right? Well, it's possibility it's definitely going to do that, okay? Because it's probably going to pull back and kind of fill in some of these imbalances or gaps right here, okay? Now the supply zone is, if you look at it, we are not even breaking, this is the supply zone off of the 12 range chart, okay? So people always ask where to put the stop loss, whatever the case is. It depends on you as a trader. Always talk about, you can place your stop at the back end of supply. You can place your stop at the median portion or area of supply. So we take a look here on the 12 range. I'll show you that right here. Here's that supply zone right here. So this would be at the back end, right above 44.25. At the middle area, that area of this zone here, we could say it's sitting here at 23. You could put it back there. If you put it back at 23, that's going to protect you a little bit more, and you're not taking as much drawdown. Scale back down to the 4 range chart, and if we look at it, it's going to be right here, the 23 area. Or you could put it once right here at the back end. So once we will see the M formation right here, and price breaks below the V point or V structure area of the M formation there, and we take a trade primarily around 44.19 a quarter maybe, we could place a stop right here at the back end of 22.5, okay, which is almost the midpoint area of the original 12R demand zone, excuse me, supply zone, okay, at 23. So what happens? Yes, price does pull back. We're still in the game though. We're still in the trade because price has not, primarily if you put your stop right here, say the midpoint of the 12 range supply zone at 23, it pulls back. Yep. So what are they doing? They're testing stops, guys. What they're trying to do, they're trying to stop hit buy stop areas and try to stop traders out, okay, before they start to push the market lower. All right, so their means of let the market run a little bit, pulling back. They know people probably put their entry on or put the position on here at 22.5. So what do? They come back up there, they test that area maybe by 1, 2, 3 ticks, stop you out, and then push the market lower. So that's why I always say give yourself some room wherever you enter the trade from, okay? So 23 is a good area, 23.5, or if you want to put it back at the back end at 25, which is at the back end of the supply, the 12R supply zone, okay? So yes, this right here would have been a solid trade. Yes, price does pull back after you get into the entry here at 44.19 a quarter. It pushes lower, goes down to 17, so you pick up 2.25 points. It pulls back, from your entry point, say at 19 a quarter, it pulls back maybe 2.5, 3 points right there, okay? But still, if you allowed your stop and placed it somewhere at 23 or maybe at 24, maybe a little bit above the 12R supply zone there, you're still in the trade, okay? You got to kind of expect that, the trade's not going to immediately just go into your favor. It may for a little bit, but they're going to pull back because they know people are entering their trades in this area here, and above here. So you got to be smart when it comes to knowing where to put your stop loss in the market, okay? So once you're into the trade, okay, and you remain in the trade and it doesn't stop you out, the next question is, well, where do I get out the trade at? So you scale back down to scale back up, I should say, to the 12 range chart, okay? So we're into the trade, all right? 19 a quarter, okay? I'm looking for price to take out areas of liquidity right here below 44.12 and 3/4, okay? And I'm also looking to the left-hand side of my chart here to see if there are any additional imbalances or gaps, areas of gaps where price could possibly run down to and fill, right? So my first area of profit target is going to be right here at 12 and 3/4, okay? So if I got it in 19 a quarter, yep, it goes my favor a little bit. It pulls back. They're testing trader stops, okay, to stop them out because they know what people are doing. And if you're smart enough to know that they're going to test this area, in some instances or some cases they will. Sometimes they'll just they'll just continue pushing lower without pulling back. So in this case here, they actually pulled back and they're testing stops. And then once they stop traders out here, what do? They collected liquidity or picked up, picked up their money, and then they continue pushing the market lower. Okay, taking out liquidity here and then filling in these gaps or imbalances right here. Okay, back down to the downside. So if you know what you're doing, trading the M structure, as I just showed you here on the 4-range chart. Okay, price pulls back to 12-hour supply. Okay, look for the M structure formation, break, then go short. Okay, and be mindful of where to place your stop at. Okay, because they are going to test lower areas when you see, price action like this right here. All right, and then sometimes you may not get that M structure formation right here. It may happen, it may not happen, whatever the case is. And sometimes I may not even look at the 4-range chart to look for M structure formation. I may just take the break of the candle in the opposite direction, strictly off the 12-range chart. But again, by taking it off the 4-range, you're using paired charts. You're waiting for that zone to be tapped into and then scaling down to get a more precise entry, waiting for that M formation to go short. Now, what I've talked about in the past too, just as well, is when price taps into say for instance, a supply zone, okay, I just showed you, right? In most instances, I prefer to look for a break of a structure on the lower time frame. So we tap into, say for instance, a 12-hour supply zone. Then I'll look for a break of structure on the 4-range chart, okay? And what that's going to do is it's going to let me know that price is still has plenty of interest in pushing lower, okay? Because we got a supply zone, okay, off of I'm going to show you right quick, off the formation or creation of this breaker structure to the downside right here, okay? Price pulls back to a 12-hour supply zone. We got that, right? So breaker structure lower, pull back to 12-hour supply, and then if I see a breaker structure, I'll scale down to the 4-range chart, and then we get the breaker structure on the 4-range chart, okay? If we get a breaker structure, then I got two means of confluence. I got a 12-hour supply zone where there was a breaker structure at, price taps back into the supply zone, and then I get a scale down to the 4-range chart, and then I see the same type of setup. I get a breaker structure on the 4R just as well, and price pulls back to a new supply zone, which was created from a breaker structure off the 4-range chart. So there's a couple of different ways you can actually, take the trade. You can wait for the M structure, or you can look for the M structure formation off the 4-range, or you can wait for a breaker structure to the off the 4-range chart, a lower time frame chart. So pretty much, I'm going to show you an example like this right now. Okay, so this was an actual M formation right here, and you can look for the breaker structure right there. I mean, you could double your means of confluence and even create a better or a higher probability trade if you, say for instance, you got an M structure formation here on the lower time frame after tapping back into the 12R, and then you got the M structure formation, then you get a breaker structure on the 4-range, and then a pullback on the 4-range. So let me show you an example of what I'm trying to talk about, what I'm talking about there. All right, so this was on August the 18th. Okay, we got price moving lower, okay, making lower lows and lower highs. We got a supply zone resting right here, okay, with a gap or imbalance resting inside the supply zone right there, that blue box. Price pulls back to it, okay? So once we pull back to it, we can even see a M structure formation on the 12-range, right? But let's scale down now to the 4-range and see what unfolds just as well. So we've already done or met the first part, okay? Pull back to the supply zone where after having a breaker structure to the downside, pull back to an area of supply where there's an imbalance. That in itself is starting to set the trade up to be very high, be a high probability setup. So now let's scale down. All right, so now that we're on the 4-range chart, this is that 12-range supply area, okay? I just showed you on the 12-range chart. Look what happens when price retraces back up to it, okay? Disregard this purple box right here, guys, okay? Or that purple outline box. We're looking at this 12-range, looking at this supply zone right here from the 12-range chart, okay? Look what happens. We get the M formation right here, the M structure, okay? So we already got a high probability setup. We got price pulling back to a 12-range supply zone, okay, where there's an imbalance or gap resting at, okay? Off the 12-range. Price retracing back to it on the 4-range. We get the M structure formation, okay? Now, you can go long, go short here once you get the break below the M structure right here, the break of that V point right there at 81 3/4. But what you can also do too is that you can wait for a not only the M formation right here, okay, but you can also wait for a break of structure to unfold on the what? On the 4-range chart. So M structure formation here, price breaks lower, it breaks below the V point, we get some breaks, you know, instead it starts to break lower and breaking structure to the downside, okay? And then at this point, we can do is we can mark a supply zone off the lower time frame chart right here. Look at this supply zone right there. All right, that's going to also increase the probability of a trade as well, because now we've got both we got a 12 range supply, okay, that came from a breaker structure lower. All right, price tap back into it. We got the M structure formation, okay. Then if you want to, you can wait for price to break structure to the downside on the 4-range chart and then look for a supply area, okay, or zone to mark off on the 4-range chart. So you got two supply areas, one on the 12 range that price tapped into, and then it rejected from 4-range breaking structure to the downside, and then price retraces back to it here, and price retraces back to a supply zone right here. Get the rejection off the 4-range. Basically, at this point here, because I already got two means of confluence, meaning two supply zone areas, this is what happened. Price retraces back to the 12-hour supply. Boom, M structure, breaks lower, breaking structure to the downside, pulls back, taps again back into the 12-range supply zone and to a new supply zone off of the 4-range chart, okay? All I'm going to do at that point is wait for a break of candle and a break of a candle in the opposite direction, blow it up for you so you can see what I'm talking about here. Price breaks below that last up candle there, that last bullish candle, closes below with this red candle here. I'm going short and I'm aiming for pretty much the lows. I'm aiming for price to start you know, moving lower, taking out areas of liquidity, and I'm aiming for the low down here. So if you got in here, say for instance at 83.25, you know, you can start aiming for areas of liquidity below and start to aim down here at 76. Again, multiple means of confluence on using two paired charts. Okay, in this case here, we got again pull back to 12-hour supply. Okay, we got what you did right here. That first box. Let's bring this down some. First box is big box. 12-hour supply off the 12-range chart, okay? M structure, price breaks lower, breaking structures to the downside. Go ahead and mark up a supply zone. Pulls back to now a 4-range supply zone. Look for rejection, go short. Simple as that, okay? So for all those that may be getting confused about, oh, well, he took a trade back to the, you know, after the M formation structure here, and then price pushed lower, took another trade back at the 12-range supply. No. I am using the 12-range supply because that's what it originally started the setup to actually happen, the high probability setup. Price is tapping back into a new zone now that was created off of the move, okay, originally that took place off the 12-range supply area, okay? Now I'm taking a trade back off of the 4-range supply area, okay? So that's what I'm talking about. I've talked about this in multiple videos in the past where I say go ahead and mark a zone up off the higher time frame, wait for price to pull back to it on the lower time frame, then look for a breaker structure on the lower time frame and price to pull back to it, either supply or demand. In this case here, it was a pull back to a supply area off the lower time frame. Okay, so hopefully that makes sense and kind of clear the airwaves. I think somebody posted a message out on the Discord, kind of get confused about, you know, the M structure formation and pull back to the zone, and it appears that the price is tapping. You're taking another trade when price tap back into the supply zone again, not particularly into the supply zone. It is pulling back to the supply zone, but the thing about it is that now we have two zones in which price is tapping back into: the original zone off the 12R and now a new zone off the 4R. And then I'm looking for now, once I see that double means of pretty much those zones there pairing up together, I'm looking for the break of a candle in the opposite direction at this point, because now price has already made the infrastructure formation on the pullback to the 12-range demand, breaking structure to the downside on the 4-range, pulls back now to a 4-range supply area. If I said demand, guys, I'm sorry, I meant supply. Pulls back to the 12R supply, 4R supply area, get the rejection, go short. It's a lot, but you got to be able to break it down, you know, inch by inch and understand what's taking place here. Double means of confluence off of using two paired charts. The more confluence you have, all in all, is going to set up the trade to work out more so in your favor. All right. Sometimes you don't need all this extra means of confluence. Sometimes you can just take, if you're really aggressive and you're looking for, you know, to get into the trade, you can get in here below 81 3/4, and, you know, in this case here, the market kept pushing lower. That last setup I showed you where price broke below the V-point structure in the first example within this video, price actually broke below it after the M structure formation. It pushed lower, broke below the V-point structure off the M structure, then it pulled back, right? It pulled back and then pushed lower. This case here, it broke it here and just kept pushing lower. But we got a second chance, second opportunity on a retracement back to a new supply zone on the 4 range, as well as price was tapping into that 12R supply zone again, okay? But anyways, I just want to wrap it up. I just want to show you guys what I was talking about, going a little bit more in detail, breaking that down. Hopefully that kind of clears the airwaves and confusion when it comes to the M formation and W structure. Again, I didn't show an example of the W structure, but you just take it and flip it is all it is. It's the opposite. W structures, we're looking to go long. But again, you know, for that extra means of confluence, if you're not comfortable taking a trade, as soon as price taps back into the higher time frame zone, and then you get the M structure right here, then look for the M structure or break a structure in off the lower time frame, meaning a break a structure lower on the 4 range chart and then a pull back to in this case here, a supply zone on the 4 range chart, or it could be a demand zone. All right, but sometimes you may not get once price, you know, break structure below here on the 4 range chart, it may just keep pushing lower, okay, because it's trying to follow and move in the direction off the higher time frame, the 12 range chart. All right, so that's all I have for you guys. If you're interested in joining the Discord, guys, please take a look at the description portion of the video, click on it, and invite yourself into the Discord. That's all you have to do. And I will see everyone into the new trading week, which starts tomorrow. Take care. Have a good one.